determined to protect.
Okay, Cheryl, over to you.
Thank you so much, and good morning, everyone. I am your moderator for this session, Climate Financing for Conservation in the Caribbean, on day 2 of the Caribbean Conservation Finance Congress 2025. I am the Finance and Innovation Director with the Caribbean Climate Smart Accelerator. As we have our conversation this morning, I encourage our participants and attendees to post their questions for the panelists in the Q&A box throughout the course of our discussion. We'll have about 10 minutes at the back end of our discussion to address those questions from our panelists and attendees. So covering our topic this morning on climate finance, we recognize that climate finance is not just a resource. It's a lifeline for Caribbean nations facing the accelerating impacts of climate change. Yet the region continues to grapple with systemic barriers to accessing and effectively deploying climate finance. While mechanisms such as the Green Climate Fund and the Adaptation Fund are central to the global climate finance architecture, many Caribbean countries encounter challenges navigating complex application processes, meeting stringent fiduciary requirements, and aligning international financing criteria with national priorities and absorptive capacities. This session convenes leading regional institutions and climate finance practitioners to unpack solutions for unlocking, managing, and scaling climate finance, particularly for conservation and nature-based solutions that offer both climate resilience and sustainable development benefits. It will also explore the enabling role of regional intermediaries in bridging capacity gaps and strengthening country readiness to access and channel multilateral funds more effectively. Joining me to delve into this topic are Dr. Colin Young, who is the Executive Director for the Caribbean Community Climate Change Center, or the 5Cs, as we affectionately refer to the organization. Dr. Colin Young has been Executive Director of the 5Cs since January 2020, and his most recent professional experience prior to his appointment includes serving as the Chief Executive Officer of the Social Security Board, a parastatal entity in Belize that administers the Social Security Fund. Dr. Young has also served as the CEO in the Ministry of Agriculture, Forestry, Fisheries, the Environment, and Sustainable Development. And prior to that, he also served as the CEO in the Ministry of Energy, Science and Technology, and Public Utilities. Dr. Young has also served on numerous boards, including the Green Climate Fund. Dr. Young, I invite you to come on screen, and we'll start the conversation with an initial intervention from you. As we delve into the matter of climate finance and the mobilizing funding for climate for our region, I think one of the critical and persistent challenges that we face relates to access. States, including and especially those in the Caribbean, often struggle with access to the very climate finance mechanisms that are intended to support us, such as the Green Climate Fund and the Adaptation Fund. The challenges that we've heard of range from technical and institutional capacity to difficulty meeting accreditation standards to lack of predictable and simplified access pathways. So I think the foundational question we'd want to address coming out of this, and to hear from you as lead of 5Cs, which certainly is an accredited entity, is what are the main challenges that you see states facing in accessing climate finance from these mechanisms?
Thank you very much, Cheryl, and I do want to congratulate the CBF for having this wonderful event and for inviting the 5Cs to be a part of this conversation. It's a pleasure to be here. In terms of the challenges, I think in your introduction, you did an excellent job in highlighting some of the sort of persistent challenges that have been affecting SIDS access. As you rightly said, I think the context of the whole climate finance under the Paris Agreement and under the UNFCCC provides a specific carve-out for the special circumstances of small island developing states. And the climate funds, like the GCF, is to prioritize access of SIDS to these funds, as well as funds like the Adaptation Fund. But yet, when we look at just the sheer number of projects approved and the amount of financing approved by these funds, SIDS are getting the smallest share of these global international climate finance flows. The GCF, for example, has already programmed over $18 billion in terms of approval. SIDS in total have access about 10% of that. CARICOM member countries have access total only about 800 million to date. And so the challenges, the first one I think has been, in order to access resources from the Green Climate Fund and the Adaptation Fund, there has to be an accredited entity. And the accreditation process has been very, very cumbersome and very lengthy and quite difficult. On average, it would take about 2 to 3 years to get accredited to these funds. The 5C's own experience with the GCF would have been a little bit over 2 years, with the Adaptation Fund even longer. And I do have to say that the GCF has recently revised their accreditation strategy to make it more fit for purpose. And they're hoping to move the accreditation from 30 months down to 9 months. And that is left to be seen. Unfortunately, I think what would happen is the due diligence that would have to be done would then be moved to when you first try to apply for a project. So accreditation is definitely an issue. The GCF also have what they call a project-specific assessment approach, which allows you to forego the whole complex accreditation requirements, and you just apply for implementation of a specific project. So they have been evolving to deal with some of the bottlenecks that they see in the accreditation space. The good thing about an accreditation, however, is that then it allows the organization to then utilize their own procedures and systems, like their procurement, the gender policy and stakeholder requirements. As part of that, then you'll find that there are still some CARICOM countries who don't have any direct access entities accredited to the fund. So they're then reliant to use international accredited entities or a regional direct access entity like a 5Cs or a Caribbean Development Bank. So accreditation, definitely. Another big challenge that is still an issue is the need to have what we call a climate science basis, or the climate rationale, right? That essentially is saying that the problem that you're proposing to fix is one that is caused by climate change. And so there is this differentiation within the funds about what is a development project versus what is a climate project. And they don't fund development in its pure sense. And similar conservation, right? This is a topic about conservation too. They don't fund conservation unless there can be a direct link to the fact that the issues you're trying to fix is a climate one. So our region has gotten a lot better in terms of having access to high intensity data and high resolution data, but it is still a problem because normally wherever you're implementing the project, they want that data as local as possible. And as a result of not having the data, then oftentimes you have to spend an entire year accessing resources just to complete all of the data that you need to make the climate science basis for the proposal. So that is definitely another challenge that we're dealing with. It's a highly intensive process, and it's a very expensive process. And that's the third challenge. To access these funds, to do all of what you're required to do, the feasibility studies, the ESIAs, the gender studies, all the stakeholder consultations, the financial modeling, all of these things, when you add it all up, costs about almost $1 million in the 5C's experience to be able to mobilize climate finance from the GCF. Fortunately, the GCF does provide a project preparation grant facility up to $1.5 million to assist us in preparing those projects, but that adds automatically a year to 18 months accessing the financing, because you have to first apply for the PPF. Once that is funded, then you spend a year getting all of the studies done. Then you now get to submit the proposal. So that's a serious issue that remains. And then, of course, as I just said, the time to secure a funding proposal, on average, that takes a couple of years, 2 to 3, sometimes 4 to 5. Again, the GCF has committed to this, what they call efficient GCF, and they're hoping to reduce that to about 9 months. But it's on the premise that you would have had the data, that you would have had to be able to have the climate rationale, and that your project would be completely bankable. And then the last thing, Cheryl, before I wrap up, is the issue of the scale. So generally, SIDS access very small projects. A lot of the national accredited entities are accredited for up to what we call micro for the GCF, which is up to 10 million. And then that project would be implemented over 4 to 5 years. So it takes 2 to 3 years to get the money. And then that project takes about 4 to 5 years to implement, assuming that the environment stays the same. It then begs that sometimes the circumstances that you're left with have changed because of the length of time it takes to access these resources.
So, I mean, that sounds like a daunting process, and you haven't even factored in the 2 to 3 year accreditation process. So it could easily be 5 years before you could access funding for a project and then live through the project life cycle, where, as you said, the underlying assumptions and so on that would have led into the project development may have changed significantly. Meanwhile, of course, we are faced on a year-to-year basis with the significant risks of climate change. So certainly, I think, but I hope that by the time we get to the end of this conversation, we would have found some solutions and alternatives to that, because that really sounds like a very long-term solution. I'll turn now to Kiran St. Omer from the Eastern Caribbean Central Bank. Kiran is the lead for the ECCU Regional Renewable Energy Infrastructure and Financing Facility, but her substantive role is Senior Project Officer and Program Lead for Greening the Financial System at the ECCB. She has over 15 years of regional and international experience in banking, capital markets, regulation, fintech, energy, and climate finance, as well as project management. Kiran, I'll invite you to make your intervention at this stage on the question of the barriers from your perspective, and from the perspective of the ECCB. What are the main challenges that you believe our Caribbean nations are facing with accessing funding from these international, UNFCCC mechanisms?
Thank you, Cheryl, and thank you, Dr. Young, for expanding on those challenges. So I will seek to add to that from the perspective of the banking and capital markets in the region. From where we sit at the central bank, we've been very disciplined in our approach in terms of ensuring financial sector readiness. And as per the speakers who have gone before me, it is a tall order for us all. And we constantly see the theme of regionalization for scale, not just in terms of getting the type of projects or value of the project sizes or funding sizes that would attract investors, but also in terms of scaling and coming together in areas of capacity building, as well as tapping into the global climate finance space, because scale remains a common theme across most of those issues when we even think of our institutional frameworks, as opposed to, well, we have not done it. And I note there is, if I could, for lack of a better phrase, a mad rush to achieve the 2030 agenda. And now what is being quoted is 2035. For multilateral agreements and targets that most of our member states, if not all, would have signed on to since as far back as 2015, so almost 10 or more, approaching 2 decades. And what we see is that climate finance the needs continue to grow. And that is really related to the cost of inaction. So much research and studies have gone and are still going on, especially now countries are in the process of updating their targets via the NDCs, National Determined Contributions, under the Paris Agreement. And for our member states, as Dr. Young and even the panel ahead did speak, when we think of at different levels, the policy, the legal environment, as well as the incentives, the framework that is set up, be it tax incentives, financial sector incentives, because you've heard over the years the outcry, where is finance? Where are the financial sector? When you hear that, you speak of, you really referring to private finance. The Adaptation Fund, Green Climate Fund, these speak to public climate finance and multi-donor or charitable trusts and agencies that are available. And there is that dwindling availability or competitiveness as all globally, all countries, especially emerging market, developing countries, are doing their best to accelerate the transition to more environmentally friendly practices, the green, inclusive, green, and clean for sustainability, because we do see the impact out there. And what is very sensitive to us is beyond a typical central bank's role in terms of monetary policy, regulating that, fiscal and financial stability, they are interrelated because of our vulnerabilities in the Caribbean. We're highly vulnerable to climate risks. Financial institutions are exposed to financial sector-related climate risks when we talk about transition. And I will stick a pin here and go into it a bit more. We are heavily dependent on tourism. And when you think of tourism, it depends on our biodiversity, us protecting those resources. And I mean, the overall life and our well-being depends on it. So our livelihoods are very tied to it, given our focus. Over 60% of our economic activity in terms of revenues we earn is tied to the tourism sector. As the global temperatures rise, it is in our best interest to do what we can to help reduce that, though we contribute a very minimal amount to it, but we are in the front lines and it will affect the way we live. And we're seeing that when tourism is a very day-centered activity, and persons are now having to think of night tourism to attract, because the advisories are to stay indoors. Temperatures are exceeding over 100. When we even think of we build our homes, so it affects the mortgage sector. And we see that a large portion of our assets, over 200% when you compare it to value of our gross domestic product or overall economic earnings in the region, lie within financial institutions, primarily banks, which dominate. And we're seeing an increasing in terms of credit unions playing a role in that. So these institutions need strengthening in terms of their capacity. We've done some baseline studies to ensure that they can allocate credit to such conservation efforts, be able to estimate the risk and monitor and evaluate those projects. And the fact that those tools are lacking and the frameworks are not in place, we see that funding is not being allocated. It may not be deemed to be profitable. So there is an integrated approach that needs to be had when we think of the public sector ensuring the environment is ready, which Dr. Collin would have touched on, and the private sector, given our convening power and as the apex regulator in the financial system. ACCB does have that critical role to ensure the financial system does step up and be a part of the climate action. So just to share a few more points, the integrated partnership between the private sector and the public sector is critical. And we know that there are quite a few innovative mechanisms like smart climate finance or smart PPP frameworks. And that also has implications for the legal. How fast can we move the legislation to amend, to adapt, and provide for these changes? There are lots of solutions in terms of innovative financing mechanisms, and we see blue bonds, sustainable development linked bonds, green bonds. In the region, very few issuances, or there's not much participation, and this goes back to the challenges of not having the right frameworks, policies to meet the requirements for us to access based on the latest news release by the Climate Policy Initiative, as at this morning, we see global climate finance exploding in terms of 1.4 billion, and it's close to, well, the estimates for 2024 is that it will reach the 2 billion target as the data continues to be validated. And in the region, we've not been able to tap into that. So there is available funding. We see even in the public funds, like there are different initiatives, technical assistance, and the governments have not been able to tap into. We touched on the issue of proposal writing, the data, these impacts. So how do we address those? As I said, ECCB has been very disciplined. We are rolling out the Renewable Energy Infrastructure Financing Facility, and that has been over the last 5 years. Various diagnostic assessments, mapping of initiatives to see where we can add value by bringing finance, not only the dollar, but institutions to participate and be more active in mobilizing resources. So we've done the work.
Karen, I'm going to ask you to just stick a pin there because you've introduced a couple of concepts that, hey, I really want us to delve into a bit more.
Sure.
So you spoke of the issue of scale, and I want to tie that into Dr. Young's earlier comments about transaction costs, the cost of project preparation, and the cost of accreditation as well. So knowing that we have a couple of entities within the region who have managed to kind of cross that hurdle of accreditation, I'd want to hear from you, Dr. Young first, and then perhaps Karen, you can come back in again on the role of these intermediaries who've managed to, cross the finish line in terms of accreditation so far. What are your roles within the region in terms of coordinating project pipelines and programs and projects and supporting access to these international facilities, as well as to other forms of climate finance, including private finance and philanthropic support for our region?
So thank you, Cheryl. And I think you've touched a very important point, because accreditation is just the ability to sit at the table to play, right? You really, once you go through this quite laborious process of getting accredited, you've gotten no money at that point, right? You still now have to be able to work with our countries to be able to develop these quote unquote bankable projects that need to be submitted. And really, so the accreditation is a means to an end. And what the 5Cs has done, and we've been modestly successful in this space. To date, the 5Cs has mobilized and invested over $250 million across CARICOM member states. We're currently managing a portfolio of over almost $170 million, and we've accessed over 100 million from the Green Climate Fund. Right, and we have about 70 million in the pipeline from the Adaptation Fund. So, as you said, we have been able to be able to access these funds, and one of the ways we did that is that the 5Cs had put in place what we call a project development and management unit. That is staffed with project developers. That's their job. They work with countries to write projects that are aligned with their national adaptation plans, with their NDCs, their nationally determined contributions, and other climate priorities. And then we submit these proposals on their behalf to the GCF, to the Adaptation Fund, to other partners. That unit also has some enabling staff or functions that are very critical as part of the criteria to access. So we have to have a gender specialist who could ensure that gender is included within the design of the projects, and that we have indicators that can be measured to look at gender. We have an environmental and social safeguard specialist who then looks to ensure that it's meeting our environmental and safeguard policies and requirements. We also have an M&E person who then is able to help us design the right indicators for submission. And then we have to have people who do financial modeling, right? So the 5Cs has this capacity in-house where we have people who this is their job. And then once we get access to the resources now, we have another group of persons within the 5Cs that are the project managers. That's why it's called the Project Development and Management Unit. And then now that unit has project managers, and they're supported by a very competent group of procurement specialists who, because the biggest barrier to achieving project success, once you have the money, is now being able to spend it, and to spend it in line with the donor requirements and the procurement policies. So we have a group of persons who that's what they do. They work with the countries to do the procurement. So that's how we've managed to do that. The other role that the 5Cs play is because of our mandate as a CARICOM institution that has a mandate to help the region coordinate climate change. We have also, over the years, built up a solid track record of as a data repository. The 5Cs hosts the largest repository of Caribbean-specific climate information at the 5Cs. We've installed over 200 automatic weather stations across all 15 countries in CARICOM that provides real-time data to the Met offices. That data is stored at the 5Cs. CIMH uses it in their forecasting. In addition to that, we do quite a bit of training and capacity building with our countries in terms of mentorship, in terms of, we have a community of practice of accredited entities where we convene at least twice a year and we share experiences. We do training in project development. As a CARICOM institution, we've also championed regional policy and strategies like the revised regional framework for achieving development resilient to climate change. This was recently endorsed by heads of government at the meeting in Jamaica. This outlines sort of the broad priorities that our countries are concerned about when it comes to climate change. And then the 5C's job is the secretariat that helps and tries to help to mobilize monies for other entities to be able to execute their role under that agreement. And then lastly, two things that we are very proud of is that we have been able, with the support of the UK and FCDO, to deploy the largest deployment of Caribbean capacity in project developers in the region. We've deployed 14 developers in 7 member states across the region who are in ministries that provide a capacity to help that ministry, that government, to mobilize readiness resources from the GCF. And then the 5Cs project specialists at the 5Cs provide technical backstopping to help those persons mobilize resources. And then we also have a small project preparation facility. I heard Kieran speak about, they have one for the energy area. Because if you have a project preparation facility, it allows you to tap into that rather than to have to wait a year to tap into the ones from the donors. So those are some of the ways that the 5Cs continue to help our countries. We have currently a pipeline of projects of $500 million that are in 12 of our member states that we hope to deliver in the next few years on their behalf.
Great, thank you for that. And I think certainly on the question of capacity, which we highlighted in this discussion, but it is a continual issue, and there is a consistent call for additional capacity for our countries. It certainly is heartening to hear that you have been able to successfully deploy bodies and seats that really help to expand capacity as opposed to simply provide knowledge into our Caribbean countries, governments, and the underlying ministries. So Kieran, if I could get a quick response from you on coordination and access, and then I will delve into some success stories from each of you. We have 15 minutes left in our conversation, and we want to have some time for Q&A.
Thank
So
you,
over to you,
Cheryl.
Kieran.
Thank you. So yes, coordination and access remains, as I would have referenced, noting the barriers there. We did these baseline studies, especially where we started with the renewable energy sector, given it's critical to economic activity and the green transition. So when we think of transport, even food agriculture, food security, water security, energy is central. And starting there was important. There have been quite a few initiatives, facilities, and countries could not tap into that. And Dr. Young beautifully laid out the response, what will work, a very pragmatic approach, which is what we're taking in terms of setting up that renewable energy infrastructure facility. We're staffing the project implementation units at the national level as well as the regional level to enable that coordination. The landscape is fragmented. There are over 50 project preparation facilities and different initiatives. Like every day you hear something popping up. And what I do see is a lot of outreach across partners to find out what is it you're working on, what is it, so that we can add value or expand. And this is the way to go with accelerating the transition and supporting member states, the private sector, to be able to tap into these financing mechanisms so that we have the right capacities. So similar to what 5Cs is doing, we will be staffing at the national level, bringing the capacity. There has been technical assistance provided through the countries. We've designed those project implementation units as well. There is room for regionalization because you would want to avoid duplicate costs. There is need to look at a hybrid. What do you need in your pool of experts, whether they're full-time, part-time, because there is a cost factor to look at. And as we develop the pipeline of projects across both mitigation, adaptation, climate resilience, you will be able to see that capacity. The vision is that we will be able to achieve some level of sustainability. Recently, just in terms of getting my vehicle serviced, and I was interested, what is the price of this hybrid? And they were like, the main thing to be worried about is maintenance. We do not have technicians available. And we know these are targets. These are areas that our governments want to see improvements on when we lay out the infrastructure for electric mobility, and not having these technicians available. So the education aspect is very critical, and it is something that is high on the agenda. So we are designing, and we would love, Dr. Young, I'm going to plug it in right there, hearing your initiatives. We've been speaking to different partners like CARELEX, Secret, to see what you're already doing, where we can direct funding. If it's extend those programs to be able to increase the geographical scope and participation across the board for also the private sector. So I'll stop here, Cheryl.
Thank you so much. And I think that's a good segue into what our successes have been. We started out by looking at the barriers and progress that we have made with overcoming some of those barriers and how regional entities can support. But I think it is equally important to indicate where we've had successes. Starting with you, Dr. Young, I'd really like to hear from you when you review your pipeline that has gone through or is currently with the 5Cs. What are the successes for conservation and nature-based solutions that you can point to as having been developed and implemented across the region?
So we have, in terms of our pipeline and projects approved, most of our projects are actually not in the conservation and or nature-based space. It's largely been in what we call the fuel nexus, right? The food, energy, and water nexus, and integrated, where we seek to build resilience across multiple sectors at the same time. And so they're cross-cutting. When you look at the areas that countries have identified as the most pressing, you'll find that energy, water, food security, or urban resilience and dealing with issues around flooding and so on is key. However, we have quite a bit of experience in mobilizing resources that have what we call, to fit into the lingo of the donors, is what we call the co-benefits, right? You have conservation co-benefits, where the protection or conservation of biodiversity is a co-benefit that results because of the implementation of actions to help build resilience. So for example, if you're looking at stabilizing coastlines with mangroves or protecting mangroves, obviously there will be some conservation co-benefits with that. Similarly, with trying to use natural solutions to stop coastal erosion and so on. We have a project with the Canadians, for example, where we are helping to a local NGO in Belize that is looking at replanting resilient varieties of corals that are not bleached to other parts of the reef to be able to scale that up. Again, the damage is because of increased wave action, sea level rise, hurricanes, and storms. But obviously, by having a thriving coral reef ecosystem, then there are all these co-benefits for conservation. I think, though, in terms of the lessons learned very quickly, Cheryl, one is that this has to be country-owned, right? It has to, you can't build adaptation from the top down. You really need to be a bottom-up approach. And so as a regional institution like the 5Cs, it is incumbent, it's imperative that we form these strategic partnerships with entities who are already on the ground, who know the people, who know the landscape, who understand the dynamics of working in communities. So we have to rely on their experience, their knowledge. We have to rely on traditional ecological knowledge and utilize that to help design better projects. And we have to have a very inclusive process where civil society, where vulnerable groups, indigenous people, women, youths, children are a part of this conversation and discussion, not just for lip service, but in terms of beneficiaries of the financing that flows to the ground. Because generally we work at from 5Cs, governments, but then you really need to get financing at the level of communities. And these types of projects that you talk about, conservation, nature-based solutions, we have a lot of really, really incredible organizations who are already doing incredible work on the ground. We now need to find a way to help them do their job even better.
Thank you for that. And I'll take a quick question from the Q&A box directed perhaps to you, Dr. Young, because you did mention that 5Cs is the actual repository for climate science and climate data for the Caribbean on behalf of CARICOM. So we have a question from anonymous attendee about data analytics and how can people who work in the data analytics field help in bringing capacity in bridging the data gaps and access to finance for studies?
Well, that is another area that for which capacity is definitely exists in the region, but we don't have enough. We don't have enough of those persons, right? So and right now the 5Cs is actually working in trying to get a project approved with the University of the West Indies Climate Studies Group to now utilize AI to help us with some of the climate modeling that is going to be required. Also in terms of trying to do attribution science. So the idea now of having this, we for a long time we didn't have the data. Now we are starting to get the data, but obviously it's a huge amount of data. And so how do we use machine learning? How do we use AI to now help us to manage this huge data set? Because right now, for example, the 5Cs is now building out its LiDAR data set. We completed LiDAR portions of LiDAR surveys in about 10 of our CARICOM countries, and those data sets are talking about billions of points of data across the region. So that's one way we're doing it. But for that person who just asked the question, if they can reach out, we're always looking for this capacity to help 5Cs, but also to assist our countries who are working at the national level as well.
And Dr. Young, I know you have a hard stop, so I'm going to throw just one more question at you before you go, and then turn to Kiran perhaps for the closing comment before I also wrap up. So comment or question from Shalini Maharaj. Can the pros and cons of accreditation be discussed? So Dr. Young, for you as an accredited entity, There are a couple of regional entities that are also accredited. Does it make sense for any other entity to take on this process? I think in the previous panel, we would have heard Karen, I think Anton mentioned that the Bahamas Trust Fund was also looking at this. Does it make sense? What are the pros and cons for someone who's looking at this in the context of the other entities from the Caribbean who've also gone that route?
I would say definitely, but it depends on who you are and what is your mandate. Because if you come from a country that already has 1 or 2 accredited entities, the question is, can you work through them, right? Because remember, the accredited entity is a means to an end. Now, if you're a national entity and the country lacks an accreditation entity, by all means, I think it's a good investment and strategy, because at the end of what comes out of that process is that you have now built your capacity of your institution. So you have very strong policies and fiduciary requirements. You've put in place your AML CFT requirements. You have gender policies. You have ESS. So once you've gone through the process, then a lot of the institutional strengthening that would have been required now benefits you in your engagement and your work with other partners. Because for many entities, the accreditation to the Green Climate Fund is quote unquote the gold standard, because it's by far the most difficult to achieve. So once you've done that, it is now saying to other partners, including the private sector, that, you know what, we have these systems in place to be able to manage these funds. And then also you have to we could walk and chew gum at the same time, right? So while you're working on having your own national accredited entity in a country, at the same time you have a 5Cs, you have a CDB, and you also have access to the international accredited entities. You have the IDBs, you have the World Banks, and countries really should be looking at all of these options to be able to access funds at scale with entities that have comparative advantages in some of these areas. Because what we need is our resources to help build our resilience, right? And primarily on the adaptation side. And I wanted to make a quick point, because Kieran's intervention with the private sector, but a lot of what our countries are really interested in and really want monies to fund are those things for which we can't get a return of an investment, right? Because they're adaptation, and a lot of the adaptation type projects are public good type investments. So thank you, Cheryl. And I know that we're running out of time, but it's a pleasure to have been invited. I want to thank you and Kieran and the CBF for having me.
Thank you for joining us, Dr. Young. Kieran, we'll turn back to you for some brief comments on success stories from your work with the ECCB. What do those look
Definitely.
like?
Thank you. And even what Dr. Young shared, I would just latch on to his final points, where we see that how we mobilize and scale up climate finance. That has been the ECCB's motivation for setting up. One of our recent successes would be the landmark financing agreement for the Renewable Energy Infrastructure Investment Facility, where we've been able to bring on board 3 member states in the ECCU, where we secured at least $115 million in funding for a series of renewable energy projects. And this is critical. Since April that was approved, we had a financing agreement where the countries signed on in July, and we've been able to add a few more countries, bringing them on board by mobilizing grant funding. And that is the power of a regional approach to scaling finance, climate finance. And this does have a level of bias or preference among multilateral funding agencies as well as donor funds, because they see the scalability in it and the competitive advantage or comparative advantage, where we're able to deploy country-specific and regional mechanisms to address risks, because there are some nuanced factors that have to be addressed at the national level. So this balance and careful approach, when you also think of the political sensitivities that you have to overcome or navigate, if I should use that word, as you invest in critical infrastructure assets like renewable energy infrastructure. Think of the past experiences we've had when it comes to geothermal, quite a large potential in the region, but that has not been able to move. And we've seen some significant progress in some countries like Dominica, St. Lucia, and even St. Kitts, moving in that direction. And this is just the beginning, and Dr. Young pointed it out. The first movers, it's usually public funding that will put in place the infrastructure, the drilling, the feasibility. The private sector would not. So these have to be done, and these generally require a significant outlay of projects and resources, funding as well. So what we've done by mobilizing those funds, we have provided that sort of funding to the countries to start developing. One key thing in the infrastructure framework is transmission and distribution lines. The private sector may not come and do that for you. We have issues where the port industry is facing requirements that they have to meet. For cleaner ports, the cruise ships will be there are new policies in the international community being issued that they must comply with within a year or so. So our ports must meet those requirements, and that requires significant investment in transmission and distribution lines. So this is what our pipeline has at the moment, as well as power generation, where different technologies, even wave technology, wind, geothermal, solar. So we're started off at the energy, within the energy sector, because this is required for any type of transition that we have in mind. When it comes to food security, transport, water, we need to ensure access to the clean energy sources, and from an inclusive approach. The average person, though the price of solar PV is dwindling, the average person may not be able to afford that. And there are the banks, as I said, we're looking at the readiness so they can design favorable products, loans, and different programs. The public and private sector have to come together to build concessionality in some of the financing instruments of funding that the banks or the private sector can provide. And this is what we're working towards, to sort of reduce the risk or the rate of interest that the average person, entrepreneurs, private businesses would incur. We have also launched climate risk stress testing and assessment framework, the development of that, which is critical, and it goes back to the data. The banks being able to report and for us to monitor how much funding is going to climate related activities that will actually advance the transition to a green economy. And with that, building capacity within these institutions and the private sector. We've had quite a few training programs for private finance in terms of renewable energy and greening the financial system. We've launched a series of webinars to sort of build awareness and understanding so that we can influence the culture. It requires a cultural shift among each and every one of us in how our everyday practices, because of the impact of climate change and the increasing temperatures, we all would have to adapt very quickly for that. Additionally, we're working in terms of partnerships with key stakeholders like yourself, Cheryl, where we're eager to support and share as much information. I mentioned that as well, building capacity programs within the public sector, having them involved, and with different universities at the national level, that is incorporated in terms of scholarships that will be provided. We also have a green finance regional strategy that will sort of identify and act as a roadmap for all stakeholders, the financial sector primarily, to be able to know how do we evolve in bringing on board the type of innovative products that are needed to finance these activities for our transition. I will stop here. Just wanted to speak in terms of accreditation. Dr. Young did touch on that, and we see in our discussions with the GCF and our ability to scale funding, we've brought on 115 million via World Bank financing package, and we have strong interest from the likes of the Green Climate Fund, the Agence Française de Développement AFD, We've been speaking to different partners like CAF, quite a few to come on board and mobilize or scale up the facility. And for overall climate change related projects in the region, we're working very closely with CDB as well, looking at and the OECS because they're to avoid duplicity, to ensure that we can coordinate as regional institutions that do have that responsibility to deploy and direct those activities and the funding to ensure that it's accessible. We constantly work closely with the heads of state, the relevant climate-related ministries. This is critical, as we said. There can be all the funding. There is a lot of funding out there, but we haven't been able to tap into it. And when I hear stories like there are facilities with $60 million and the window closed because the governments could not tap into it. Another key
Yeah.
thing is the need, since this is on conservation finance, guarantee products. This is critical to help when we talk about mobilizing climate finance. And I will go back to private climate finance because we know the risks are high when we think of resilience and restoration in an emergency situation. This is what we face. So having those guarantee instruments, we do have a regional guarantee fund that is being set up currently, at least 30 million. It's capitalized from funding from free countries. And as more countries come on board and even those multilateral and donor agencies, grant funding is what we're targeting to capitalize that because our strategy is not to add to the debt situation of member states. So we've been
Great.
able
Grant,
to.
I think we do need to wrap at this stage.
Okay.
So thank
So
you
I
so
can
much.
end here. I can end
Yeah.
here. Yes, guarantee products are critical to move things along.
Thank you so much. Thank you for your amazing intervention. And we also want to thank Dr. Young, who has already led the session, for his contribution. I think what we have heard, and certainly from the plethora of solutions that you would have pointed to coming out of the ECCB, Kiran, is that our regional entities are stepping up, our countries are innovating, our communities are leading, and that we must now match that momentum with reforms that make climate finance more accessible, more responsive, and more locally driven. Thank you so much to our panelists. Thank you to our participants. And congratulations again to CBF for the 2025 Congress on Conservation Finance. And thank you for inviting us to participate. Have a good day, everyone.
Bye all.
Bye-bye.